Risk and risk management when it comes to investing. How do you teach your kids about that? The first thing when talking about risk is they need to understand what an investment is. An investment is simply something that you take a monetary value and you exchange it or invest it into a company, into a stock, you issue a bond or you buy a bond, mutual funds, ETFs, but you're putting your money in often what a lot of people will call the markets. And there's a lot of different markets. I know some people will just say the market. I think, what's the market? Is it large company stocks, small company stocks, international, domestic? There's a lot of markets. So be careful with the language you use, but it's really just exchanging something of monetary value as an investment. You're putting money into something. Often when I'm talking about an investment with kids, I'll say there's money investments where you can buy a piece of Amazon or Google or buy a piece of McDonald's in the form of a stock. But before you invest, you need to figure out whether you really believe in the company or not. And if you think they've got good profitability going forward, meaning are they making products that you can get behind, that even when the investment gets rocky, meaning everything doesn't always go up. So even when the market goes down a little bit and the stock goes down, are you gonna stay in? So here's how I did it with my daughter. My daughter and I were in the car and we were by the airport and we saw some of the UPS planes and it was Christmas time. And she said, "Mom, did you see the news report?" She's quite the news junkie, by the way. She said, "Did you see the news report on Amazon?" She goes, "I know that you love Amazon." I said, "No, I love Amazon. Amazon is in our family portfolio." And she said, "Did you see the stock dropped?" And I said, "No, I do. They're having some hard time getting their deliveries done this season." And she said, "I think they need to buy new planes. They need to have their own fleet." And I said, "Well, gosh, that's a lot of money investment. Are you willing to stay invested if they continue to lose money and then they invest more and don't give a profit for a couple years?" She said, "Absolutely. 2-day service at the front door, Mom. How could you be such a great mom without Amazon?" I said, "I don't know, Taylor, but I agree with you. I do believe in their business model. And I'm willing to take risk on their business with my money because I do think they'll figure it out. And I do think that they will be profitable." Having conversations regarding risk and investing should be a fluid conversation with your children. Use an example. Starbucks was another decision or discussion that I had with my other daughter. My oldest daughter loves Starbucks. And she was talking about investing in the family portfolio and choosing Starbucks. We run hypothetical portfolios. And we were looking at Starbucks and how quickly they were spreading across the country. We also love to travel, so we see them everywhere we go. They're all over the corners, even in international countries. So I asked her, "What do you think?" And she said, "Mom, I like the product," and she went through everything she liked about it. I said, "So are you willing to invest and stay invested even when the market is down with this company? Do you believe in their business model that much?" And she said, "I do, Mom. I'm willing. I like that company. I would invest my money in that company." Why are these conversations important? Number one, you need to help your children understand that investing and risk that you take in investing isn't just going out to some big black hole called the market. You're actually investing in people and companies and ideas. Number two, you need to be sure that you talk about the risk, meaning that Amazon does not, at the time we were just discussing this, did not own any of their own planes or any of their own fleet. They were really relying on UPS to do most of the deliveries. That caused an issue because when they fell short because of some weather, they weren't able to deliver their packages when they said they were going to. And Amazon's built an entire business model over when they deliver packages. But by discussing that and recognizing that the stock had lost money at that point for our family portfolio, they were still willing to stay in. And that's important. And number three, by getting your kids accustomed to looking at risk and living with the ups and the downs in the stock markets, what you're going to do is you're setting them up for when they get their first jobs, they get 401ks, and they have an opportunity to invest early. When there is volatility in those portfolios, and there will be, they won't log on and go all the cash and try to start timing the markets. Because you and I know at least in our heads, maybe some of us have actually done it, because I know a lot of people, we do at times, we'll try to jump in and out. We think that, I think it's coming, I'm gonna jump out. But that's because we've grown up with fear around that volatility. If you start to teach your kids early about risk, how to think about risk, and how to stay where they believe during volatile times, you give them the best shot of earning money long-term in investments through the good, through the bad, and keeping up with inflation. We'll continue to talk more about investing, but again, risk. Talk to your kids about investing and risk as an everyday conversation. I am a financial advisor. I'm not your financial advisor. And if I am, I'm not giving advice directly to you today. If you have any questions, please leave me a comment. I'll be happy to get back to you.